Welcome, 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 welcome. How is everybody doing? Good evening. Woo! There's a lot going on with the market. We're gonna talk about opens and closes. I'm so glad I had that conversation with you guys yesterday. So we don't have to go over it again, but you're gonna understand opens and closes and levels and locations, and hopefully we keep you in the right area. But after this video, I have another video coming out. It's a bonus episode. I'm seeing something with a particular stock that you might be interested in. So after this video, go ahead and click the bonus video. Got something cooking. Got something cooking. Anytime something stands out to me that I'm keeping my eye on, I always do a little bonus clip, but just check it out. All right, so let's go ahead and work. You know how I talk to you guys. I talk to you guys through the charts. Let's see what the market did today, and let's get it popping. All right, let me get to where we got to go to. All right, here we go. So you guys know how we start off. We start off with the SPY. We start off with the indexes. So let's get to our indexes. This is the SPY, and let's see what the SPY did, and we can kind of talk about it. So all right, guys. So the SPY broke this particular level that we were talking about. It broke the level, came up, touched it, came back down, opened below this purple line is the 200 moving average. That's a problem. We open below it and we close below it. There's nothing I can say about it. That's a problem. We're currently below the 20 moving average on the weekly. This level right here is the next support level, which is 653, I mean 652.84. This is a level right here. Bang, that's a big level. Boom, it touched it again. This is your next support level. Now, tomorrow is Friday. You guys know how Fridays and Mondays go. On Fridays, if the market has sold off on Fridays, typically it likes to bounce because people tend to take their profit for the next day, right? They tend to take their profit. They don't want to go into the weekend and they rather just see what happens on Monday in case things want to bounce. Now, the question is this close below the 200 moving average strong enough to prevent us from bouncing? Um, I guess. There's a possibility. I have an area of around 667, 666, 667 kind of area where it can go all the way back up to and then kind of turn back down again. But Fridays are weird. I don't like trading Fridays unless I have an A plus trade. And on Friday, sometimes I just don't even trade on Friday. I like Tuesday, Wednesday, Thursday. These trades have been easy. Like these reversals and these drop down. Like today was a very easy trade. Once you saw what was going on, all you had to do was find the area. And these are the areas I said, 661. If you just did that and took it on back down, you'd have been pretty much straight. So actually in the Discord, I told them, hey, watch out, guys, we might have a bounce. That was at 658. It went all the way up to 660. What's the high for the day? 660, almost 663. I was telling you guys at 658, we might have a bounce from here. And that was early. That's at like 10 o'clock in the daytime. As a matter of fact, let me show you right here. I'll show you what time it was. It was right at about, I was looking at the 15-minute chart and it went sideways for quite some time. I think I told it around this candle right here. I said, hey guys, look like it's basing. And all you had to do was kind of hold it. And then all of a sudden we did get that rocket back up again, but then we got that fade at the end of the day. So right now, I'm gonna be honest with you. Tomorrow's trade, I will probably trade above. If I wanted to trade something, I would probably trade above the high from today or below the high from today. Those are the only two locations I will be looking at for tomorrow. So that means 662.98. I will be trading to see exactly what happens around that location if we kind of want to get a bounce from there and kind of break through because people taking profit. Or if there's no recovery, then I probably go from 655 to high 652, maybe 653s. That's about it. There's really nothing else I will probably do tomorrow with it being Friday and with us getting a confirmation below this 200 moving average. In a minute, there's gonna be a lot of flower bringing people because we rolling over and passing some major levels. Remember the video yesterday's videos, we gotta hold the line. I'm sorry, we didn't hold the line. Now the trick is making sure there's not head fakes, making sure they're not trying to trick people. But we didn't hold the line. We opened and closed below this particular level. We got both of those. We got both of them. We opened and closed below 200 moving average. That's never good. So let's get to the next. So that's what you should be looking for tomorrow. A retest of this, yeah, that might work, but I'm really so what you're gonna do is you're gonna go to 662.98. If we break through it, then I'll go up a little quick little trade, or if we get to it and then we reverse back down without a confirmation, then that's where I will short around here, or I'll play the long around here, or if we break through, then I'll just take it all the way down to this bottom part. That's it. I'm not doing too much tricky stuff because we're in a weird area. This is the 200 moving average, and you don't know when people's computers are going to kick in. You have no clue. All right, let's get to the Qs. What did the Qs do? Qs did the exact same thing, y'all. So the Qs have been trying to break below this particular candle for quite some time. We finally got a close below that candle yesterday. Then we had these levels at the bottom. We opened and closed below the 200 moving average. This looks, I'm sorry. I'm looking at the wrong thing. I apologize. I was about to say, good gracious, Qs. Okay, so we finally, okay, this is fighting. Let me be honest with you. The Qs fought. This candle, the close above or below, was our engulfing candle. We did not get that. What we did do is we got below the 200 moving average. Did we close below the 200 moving average? Nope. Now this held, this fall, it went below, opened below, rallied back up again. We still haven't gotten a close below this level, and we still didn't get a close below the 200 moving average. So I have a level right around 600 where it might go back up to and then kind of stall out and retrace and probably come back down again. But the Qs technically held. We still on the 1 yard line. We still right here where we can break through. But the Qs technically held. So I'm gonna do the exact same thing. I'm gonna put a line at the high from yesterday, and I'm gonna put a line at the low from yesterday. Those are that's gonna be my trigger to tell me exactly what the hell the market's trying to do. Because the market could drop some more since you got to close on the SPY, or the market can react to the Qs and say the Qs didn't get below the 200 moving average. So we need to check and see what's going on. So I'm putting a line at the high for the day and the low for the day and kind of playing those locations to see exactly what the market does. This is how you build a strategy. Now, I'm not gonna lie, we did not break this, so there's a strong possibility we might get a bounce. We did not close below this candle. We've been waiting. We've been waiting. All right. Now if we get below here, then we go into 583, which is a previous high, which matches where the SPY has a level. If we get above here, then I'm probably taking it back to the round number about 600, kind of in that area, and then I'm gonna just chill and pause and just see what happens. So we're gonna it's a real easy trade tomorrow. The easy trade tomorrow is highs and lows of the previous day. Okay, now this did the exact same. See, the IWM and Qs have been acting the same way. Now I'm not gonna lie, IWM actually closed at 1% up. Now keep in mind, I'm gonna have this conversation with you. Let's just talk. How risky, how cautious can the market be if the small caps are going up? Let me say that one more time. Think about it. If the small caps are going up, how much fear is in the market? Traditionally, if the market is fearful, like COVID, small caps got destroyed. You're going to get rid of the smaller companies before you get rid of Apple. Or if you feel like the market is about to shoot up and we about to have a bear market, you'll buy the smaller companies before you buy Apple because the smaller companies have more room to grow than Apple. So normally IWM kind of gives you a barometer of what's really going on before things happen. This is telling me that there is a possibility of a bounce. The SPY closed below the 200 moving average, but the Qs didn't. Now I'm looking at IWM, still didn't close below this particular candle, this engulfing candle. We didn't close below it. Now we have a second addition. We have another engulfing candle. This is higher than this particular one. So for me, what I'm going to be playing is this two locations. I'm going to, and this is all I'm going to do for the whole day, guys. I'm going to look at the previous day's high and the previous day low and see exactly what happens. Now, the reason why the previous day high for this one is important is because this is our daily reversal level. If we get above this particular level and close, we might be trying to get back to the 100 moving average, back to 20. I mean, I have no clue. But I'm looking at the high and the low of the IWM, but I'm also looking at how IWM bounced and had a green day on a down day for everybody else. So the high is 250.09, the low is 242.52. That's all I'm tracking tomorrow. If it's in between here and we shaking around and we moving around and we playing around, I'm not doing anything. But if we want to have a take profit for the shorters, and I'm going to get a little pop of that, I'm gonna get it. If we want to have a continuation of a downwards move to really make sure we get below particular levels, okay, then we can cook with that as well. There's nothing wrong with that. But I'm giving you levels so you can just be sound and make it real easy for yourself tomorrow. Do not mess around and play in dead air tomorrow. Do not do that. Do not have not don't do not come into this thing without a plan. Because you come into this thing without a plan, you will get chopped up and you will get chopped up and spit out. Okay. Now I am looking at how it's reacting to this 20 moving average on the hourly, but I'm still going to be more cautious about just the highs and the lows of the previous day. I'm not really going to mess with the hourly too much. I'm just doing highs and lows of the previous day. Last but not least, now the Dow Jones. So the Dow Jones closed below the 200 moving average yesterday. Had continuation. Then this is a level right here, 157.71. Let me show you where that level's coming from. I don't even know why I did that. Hold up. This actually started messing up. Okay, so let me show you. All right, so if you look to the left, this is a level right here. This is on the weekly. If I show it to you on the daily, you'll see it much cleaner. Let me go to the left. Boop, 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 boop. You see this candle, these candles right here? That's a candle. This is a candle. This is a previous all-time high. You getting below this particular candle, you see all that volume right there? You see all of that volume right there? That means these individuals that snatched it right here and snatched it back up again, if we break below there, these individuals that had profit and took it all the way up to 505, now when we get below 457, there's nobody that bought right here that's going to officially be profitable. So that means once they get back to this location, they might say, "Oh, well, I'm not going to turn the red a green trade red. I'll go ahead and that's my stop loss." There's a lot of stop losses right here if we break below that particular level. But as you see, we are below the 200 moving daily average. I have a level of it kind of getting back up to 463 or maybe the 200 and then slowing down and turning around. For us to really bounce a little bit, we have to get above 468.81. But what I'm going to do is, well, I don't trade the Dow, so I'm not even gonna put a line at the top or a line at the bottom. But what's so funny is that as you see, this is right here at the top of this, and this is damn near at the bottom of this. So it kind of works out. So this is a level that it says we break above here, we could get to 468, or we get to 463 and then roll back down again. That's literally what that line is telling you. But watch the 200 moving average. The Dow is probably not going to be something you want to trade, but I am looking at the SPY and I'm looking at the Qs. All right, guys, let's get down to our nitty gritty. Let's get to our canaries and let's see what the canaries are telling us. Let's go to canaries. Here we go. So let's start with emerging markets. Let's see what we did on emerging markets. Okay, boom. Okay. Emerging markets came right to this level, touched the previous high, and then bounced. Okay, we were up 0.33. Okay. Now we cooking. Now that's a story. We didn't close below the 100 moving average. We stayed above it. So if you tell me small cap was positive and emerging markets was positive, because emerging markets is the small caps for international stocks. Emerging markets are just emerging markets, exactly what it says. If you think the world is going to roll over, you think in a short time period it's about to just be blood everywhere, then why the hell are you buying companies in Africa? Why are you buying companies in rural lands? Why are you buying small cap tech companies? That's what the market just did. The market just bought emerging market and it bought small caps. These are the stories that you have to understand. You have to tell yourself because you know what each one of them means. So be prepared. We might have a little bit of a bounce on Friday. Oh, we might have just came to a level where they were trying to take people money and get you to kick your computer in, get you to sell out of a lot of your stuff instead of protecting. And now we might be bouncing because we finally hit the 200 moving average, and it might be time to turn around and bounce. I'm be honest with you, because on the 200 moving average, if we turn around and get back above the 200 moving average on the SPY and everything, the weekly candle will look like just a wick. It will look like a wick. And then from there, it'll just keep going back up again. You got to understand some of these candles get formed before they get formed. So right now, we got to see what happens on Friday. Friday's going to be very interesting. Now, I don't draw lines on this. I draw a couple of lines for major levels. But for the most part, I don't, look intraday. Let's see. Now, let's see what EFA does. Boom. Okay, now. See, this is where it gets tricky. EFA came all the way down to almost a 200 moving average, almost got below this particular engulfing candle, and then it snapped right back up. This is equivalent to large cap SPY for international companies. EFA is the large companies. EEM, emerging markets, are the small companies. This rejected, this held a line in the sand. This absolutely held a line in the sand. So this is going to be interesting, y'all. This is going to be interesting, a very interesting tomorrow. Once again, I'm just playing the highs and lows. Now, gold. See, this is where it's gonna get fun. Gold is officially oversold, right? It officially broke the weekly and closed below the weekly reversal down. But then it went and raced straight to the 200 moving to the 100 moving average and went straight to 418, a previous all-time high. Guess what it did? It came, got it, snapped it, bounced off of it, and closed at 426. If you are an investor in gold, this is probably going to be a great location to buy and hold. And because you'll know fairly quickly if you're right or wrong. And then if you turn around and get a close below this particular level, then you get out and revisit. This is when I talk about location is your family, while trend is your friend. Trend is your friend, but location is your family. This is the location on gold. If you are positive, if you're bullish on gold, this is a location you want to buy right here. The reason why you want to buy right here, because you're going to know fairly quickly if you're right or if you're wrong. All this other stuff kind of in between here is kind of dead air. But let's see where we are on the weekly. Weekly 20. As you see, hold up. So look. The 100 moving average on the daily and the 220 moving average on the weekly is the exact same location. We just closed the gap right here. Has a location of support, whether it's a moving average on the weekly, whether it's a previous all-time high, whether it's the 100 moving average on the daily. This is a great location. Now, if we break through here, then obviously you get out the trade. But check it out. You're either going to lose 3%, or if it turns back around and makes it all the way back up to top, another 100, almost 100 back up, or you're going to make 25%. Now, you tell me what's more important, trend or location. The fact that you're buying at the right location and you were patient, this is going to let you know if you're going to make your money or not. Okay, is it a possibility you lose a couple of percentage? Absolutely. But the fact that you are at the right location and you have a game plan, do not get a close below this particular candle, that already lets you know that, okay, I understand what we're doing. So in regards to gold, I would probably look at, if I wanted to get into gold, I'll probably look at the high of this candle and the low of this candle for my entry high or my exit low. That's it. I'm keeping it very simple. And if you guys can understand what makes this channel so special, us helping you identify location, you'll understand exactly why we just want to be a supplement to what you do. We don't want to tell you what to do. We just want to be a supplement to what you do so we can tell you what levels to watch out for. But yeah, so gold is at a great location for you to, and it's oversold. It's oversold on the daily. Oversold means eventually it's got to snap back like a rubber band. Bitcoin. All right, Bitcoin struggling. It's back now. Bitcoin is officially, it just closed below. No. It didn't close below 20. It's still doing its thing, but it's going sideways. We've been talking about that. It gives you little pops here, pops there, but Bitcoin is for the most part kind of going sideways, guys. I'm gonna be real with you. It's kind of, now it did have a trend. I could have drew a trend line through this particular area and it broke that trend line back down. But for the most part, I'll just use a 20 moving average to see if it can stay above it. Yeah, but Bitcoin is struggling a little bit. It got to get back above 41.12 for us to get back to start to close this particular gap right here, right at about 46 area. Okay, a little bit above 46. So yeah, Bitcoin, it is what it is, but it's still trending down on the weekly. This is still a bearish stock on the long term. See, it's still bearish. Eventually, it might go sideways till it catch up and then turn back down again. I don't know, but we'll be patient. We'll wait. All right, let's go to IYT. So IYT is our transports. As you see, IYT came right to the 200 moving average. It came right to it. That's this line right here. And we have this 72.83 line at the exact same. So everything is happening at the exact same location. That's why I'm telling you guys, there is a possibility of a bounce. There is a possibility that things might be trying to rally back up again. And if you look right here, that's the low of this one. You have some little areas over here. You have the 200 right here. So there's a lot of support right here where a computer can kick in and say, okay, now it's time to buy. You just hit the 200 moving average, it might be time to turn around. I don't know. We might get news over the weekend that the war has ceased or everything is fixed. I have no clue. But what I do know is a lot of stuff is not coincidence. Now, if we break below this 72.83, then obviously, okay, boom. All right. So now it looked like it's about to drop and about to drop hard. This was a level right here, 71.69. We've kind of broken that play with it and came right back through it and bounced back up again. So all we have to do is see. That's the transport. Transports of planes, trains, and automobiles, trucks and boats, stuff like that. Okay, now this is the one that it faltered a little bit. It opened below the monthly reversal and then rallied up. It's below the 100. It's still above the 200. Let me see what the 200 moving average is on RSP. Okay, we're still above that. So it's trying to figure out what it's trying to do, even for the short term. Short term is trending down. I'm not even gonna front on that. Even long term is now below the 20 moving average, right? So we're below that. We need to get below this red one to really start cooking. But these are these areas where I'm just letting you know what's in your way and what might be in your way. You have the 200 coming up, and then you have this location here, 191.04. If you look to your left, that's pretty much the last line of defense is these particular locations right about here. Because if you look, let me hold up. It was resistance. It came through here, then it became support, and it's breaking through. Now this green line, we didn't get close below this green. This green line is going to be very, very, very important. So I'm curious to see exactly what happens and how it works. But you see this candle right here, it was hard to see. Let me shrink it down. This candle right here is the last dip down and pop up candle. As you see right here, it came down and popped up. That's where this line is. Once you break through that, then we get below this 200, it's gonna get ugly, real ugly. We can go all the way down to 182, 182, 18. Here we go. SMH. Okay, so listen, guys, listen. Small cap IWM bounce, emerging markets bounce, semiconductors went green today. And it's in between a little area. Semiconductors went green today. Don't think it's just bloody. That's why we look at everything. Don't think it's just bloody. Gold, if gold is at a location, gold drops. So even if gold wants to continue to drop, gold is traditionally a safe haven. If gold is a safe haven, why is it dropping so hard? Now it is at a location where it could get bought, but right now it's dropping, dropping, dropping. If you're fearful of the market, then why the hell are you selling gold? Now, gold probably was a more of a speculative play because it's been rallying, rallying all the way up here for quite some time. But yeah, it's something to definitely look at. Let's go back. Bitcoin, we already looked at Bitcoin. Let's get all the way to the SMHs. Okay. So yeah, so this is interesting, guys. It's not getting below this particular level. It came and touched the previous all-time high. Hasn't recovered on the 20 moving average as of yet. Man, my bad, guys. I just messed up my just messed up my chart. Sometimes it touches it. Okay, I put it right there. All right. So now let's go to TLT. So TLT is another thing. TLT went up today, meaning that means interest rates went down. If interest rates went down, and TLT went up, it got to get above 87.52, but it's been kind of choppy. This level has been a level. As you see, 86.54 has been a level that has bounced off of quite a time. But to be real with you, TLT, it went up today. So we got interest rates dropping, small caps going up, emerging markets going up, and semiconductors going up. That scenario does not match with a bloodbath. It matches with people trying to find stuff to buy to take back up again. That's what it matches with. Oil. Now here we go with oil. Now oil had the nastiest reversal today. I even called it out inside of our Discord. This candle is a very huge candle. What we did was we rallied from the bottom of that candle all the way up to the top. We touched it at 142.07. It even went all the way up to 120, 120, 125.19, 124.07. As soon as it hits that, I got my alert. I said, man, here we go. At that moment in the day, it looked like oil's about to take off. But then this is what happened. I'm gonna show you this 15-minute candle. When I saw that, I said, ooh, that's a problem. Let me show you this 15-minute candle on oil when it hit 124. That's why candles and understanding locations matter. Look what it did. We call that almost like a shooting star. It rallied a long wick up, trying to break out, and it came right back off and sold out. Then it closed below it. Once you get a close below this particular type of candle, guess what happens at that point? That triggers a downward move because where it happened at the right location lets you know that there was a major sell-off at 125, 124, and now those people are starting to pull, they take their profit. And then once that gets going, it becomes groupthink. All right. So it just rallied down. But the cool thing about it is it did not go far enough to get below a particular level to get out of. 116.52.59 is the daily reversal, meaning now the energy is going the other way and maybe might be trying to close this gap. But it got there, stopped, and then bounced back up again. But now look at this. Now, this is the thing about oil that you got to understand. These blue tops mean it's high volume. Damn near every day, guys, has been high volume, guys. Every day has been high volume. But look at the days where it's red. We didn't move too much. Days this one red, that's a pretty big move. And now this one, now this was a huge candle. So it's almost like there's some type of manipulation going on here. Oil is not something I would short right now, but it's something that I would watch right now. Waiting for those particular levels, looking for some kind of confirmation back up. Another thing, the dollar dropped. The dollar dropped as well today. It has to get back up above 20, up above a particular level to get back up. But it just came right back to the 100 moving average, the 200 moving average. So the dollar's down. So it's a lot, man. And this is a safe haven. You telling me gold is down and the dollar's down? That's where you put your money when you are risk adverse. That's where you put your money when you're scared of the market dropping, is you put it in the dollar, you put it in gold. And you put it in bonds. Bonds went down today, interest rates went down, the dollar went down, and gold went down. Those three, and hold on. Let's talk again. Small cap went up, emerging markets went up, and semiconductors went up. Let's think about that. If I told you this without you looking at the market, if I told you the dollar went down, gold went down, and interest rates went down, as well as small caps went up, emerging markets went up, and semiconductors went up. Regardless of what the day is, you would tell me, oh, the market doesn't feel like this is risky right now. For all of that to happen, that means that the market must feel like it's time to take off. It's time to take off protections. It might be time to take on a little bit more risk. And I told you that a lot of things are right at the 200 moving average, and they rejected those 200 moving averages and they held the line. The SPY didn't, the Dow didn't, but everything else kind of did. It went to those levels and bounced back up again from EFA to the Qs. They all kind of got to a level and they didn't get below it. So this is interesting. So be prepared. When I say be prepared for a bounce, please don't. I'm not saying just do it. I'm saying wait for your confirmation, but don't be surprised. Do not be surprised because I'm reading the tea leaves. All right, here we go. XLE. Now, this is the funny thing about oil. So oil went down today, but the energy stocks went up. They up 1.78. So the stocks are stronger than oil, right? The stocks are stronger than the energy oil. So it's been going, it's already broke an all-time high, and it just keeps riding and riding and riding. And then financials. Okay. Now, this financial is very interesting. Financials are bloody, they're dead, and they're dropping, and they're just going. This is a level I wanted to see how it reacted, and it got through 48.79, and then it rejected it and tried to work its way back up. It's not time to say we out of the woods on financials, but as you notice, financials are up because interest rates went down. I'm going to say that again. Financials were up today. Financials were up today. Financials been getting blasted. Now I know we don't take one day and make a story because it just might be a blip in the sand. But I want to know if the taking profit is starting to work. But hold up, this is another thing. Let's open this up. Do you see over here to the left? Let me do this one more time, guys. I gotta take you on this journey with me. And that's why you look to your left to see things. You see this location right here on XLF? You see all that? That's a huge gap that never really got filled the right way. It's kind of like a volume or a location where it needs to be some type of buying or some type of filling of it. So what we did right now is we literally just filled that. Remember, that line is right here. So look at the line now. Look where it is right now. We dropped all the way down and we came here and we filled it. Then we came back and we got through, we dropped through the bottom, then we filled it some more and bought it some more. That location all the way to the left is telling you that this is an area of activity. This is an area of activity that needs something to happen, whether we break through it or there are some orders right here that need to get bought. Let's just see what happens. Let's see what happens with finance. Let's see if this is the bottom of financials and it works its way at least back up to the 20 moving average. Okay, guys, so that's pretty much it for this particular session. I hope you enjoyed yourself. I hope you learned some stuff. So be cautious. Be cautious on just diving into puts and just holding on to them for infinity and beyond. Things don't go straight up forever. Things don't go drop down forever. So once again, I told you I have another video coming out right after this. Please check out the bonus coverage. There's a particular stock I want you to look at, and it kind of matches with what we're talking about right here. All right, well, you guys have a great day. Have a look forward to seeing you. Hey, please like, share, subscribe, comment. Get into this, guys. We're trying to build a community. I'm gonna be giving this stuff all the time. Join our Discord. You join the Discord, you'll get the full reports for the other stocks we have. So we have the majors report, which is our indexes. We have our canaries report, which is what I just did with the 12 different XLEs and gold. And then we have 36 stocks that we look at. You want to know what Apple looks like, you want to know what Google's doing, come get our report, come check it out. Hope to see you soon. Have a good one, y'all. Bye.